welcome. You're watching Ask PQ on Bloomberg Quint. I am Shraddha Babla.
Hi, and I'm Agam Akil. This show gets you all the answers to your equity-related queries, and we're present on all the platforms, so you can send your queries to us on Twitter, Facebook, and YouTube, and WhatsApp. Make sure you also add the Ask BQ hashtag. But before we go to the queries, let's just take a look at the markets. Shraddha, what are you tracking right now?
Right, so the benchmark indices, of course, have given up all their smart opening gains at trading flattish. In fact, the Nifty, I believe, is trading with a loss of about 26 points at this point in time, below 11,300. The Sensex trading about 38 points lower. So Axis Bank and ICICI Bank are weighing on the Nifty, whereas ITC remains the top contributor. That's the only large one which is lending some support. Shares of oil marketing companies are trading at the lowest level since 2016. All of them seeing losses to the tune of about 3 to 4%. In fact, most of them trading at the weakest point of the day right now. The Nifty Bank has also corrected for the third straight day now and has slipped below the 100-day moving average. Mid-cap and the small-cap indices are seeing a lot more pressure. The mid-cap index is trading about a percent lower, while nearly 2% taken off the small-cap index. FMCG sector, however, has halted a two-day blip led by gains, again, largely by ITC and Dabur. The market breadth, however, for the broader markets remains unfavorable, with the advanced decline ratio more at 1:3 in favor of losing stocks. Among individual names, I just want to point out Aztec Life Sciences, that has lost as much as 10% after Godrej Agro had said that they will consider merging Aztec Life Science, which is its subsidiary, with itself. But you are seeing Gujarat Gas, Titagar Wagons and ABB India, which are trading with above average volumes.
Well, there you have it, some weakness coming through on the benchmark indices, further declines on the Nifty 50. But with that, let's get in our two experts for the day. We have Kunal Rambhia of The Streets and Sandeep Jain of Tradeswift Broking here to answer all your queries. Thanks to both of you gentlemen for joining us. And with that, we'll just get quickly off the mark. We take Shailendra Singh's query, and he writes to us on mail. And he is holding 560 shares of Edelweiss at around 269 rupees per share, and 350 shares of Ashok Leyland at 138. He needs a 7 to 10 year view on both these. Okay, so considering this is a relatively longer term query, I'm going to take a fundamental analysis on it. Well, on the whole, as you can see, we are seeing a substantial correction, and on both these counters. But Sandeep, I'm going to take Edelweiss up with you first. What do you make of Edelweiss? His entry points is around 269. Would you reckon that he perhaps book some losses at this point in time on the expectation of, further losses coming through, or would you recommend holding on? Let's talk about Edelweiss first, and then we'll take up Ashok Leyland.
Certainly, Edelweiss is a good hold. In fact, at these levels, somehow I don't see a big risk of downside also. Even if it goes down also, I think he did not worry. It's a fantastic management, fantastically growing company. It has grown very fast in last few years. And since it has actually gone up very fast in, say, last few months, say from 180, 200 odd levels to, say, 300 levels also, 300 plus. So now the best part is that it has corrected from its highs. So I think he shouldn't worry. He should hold on to the stock, and there will be an opportune time when he can average the stock also. And since he has a good horizon of 7 to 10 years, so I think he did not worry for these small, corrections. And regarding Ashok Leyland, the second stock, again, it is also one of my favorites. In fact, both of them are one of my favorite list also. And he should hold on to Ashok Leyland also. The company is doing excellent, and commercial vehicle space, we can see a good uptick in demand also. There's a good traction in the sector, and the macro numbers were very good. So I think this sector will do well. So he need not worry. Both of them are good picks. Because of the correction in the markets, these stocks are correcting. So he need not worry, and he should hold on to the stock with good conviction.
All right, so hold on is the advice coming in from Sandeep. Now, Karthik writes to us on WhatsApp. He's holding 1,000 shares of IOL Chemicals at the price of 125 per share. He wants a short-term as well as long-term view. I'm going to go first to Kunal and ask him for a shorter-term view. 125 is his average buying price. How is it looking on the charts?
So no, if you look at this stock from October 2017, this stock has clearly made higher top, higher bottom formation. Right now also it just broke out of the previous high that was 115 and made a high of 135, 134. You know, this stock is clearly in uptrend. Hold on with the stop loss of around 100 if your investment horizon is of at least couple of months. Expect around 155 soon on the charts.
All right, fundamental view, very quickly, Sandeep, IOL Chemicals, do you track this one?
No, I don't track the stock, so I will not be very confident of commenting on it.
Surely, fine. We move on to the next query.
Right. So, well, our next query is from Ronak Gupta, who writes to us on mail, and he actually wants a fundamental view on Kelton Tech. Ronak has a time horizon of 5 to 8 years. Sandeep, do you track this one? Perhaps if you don't track Kelton Tech, you know, anything else in technology?
See, I have been asked a couple of times from my viewers and followers and clients also regarding this stock, but somehow, you know, lots of times I'm not confident in, you know, recommending this stock also. It was actually doing very well. Now it has corrected, and since the company is into, you know, hot sectors and IT is doing well, but still this company could not do well. So I feel that, you know, someone can certainly opt for some other IT stocks, which are anyways the sector, the whole sector is actually doing very well, and there has been some correction in last 2-3 days. So again, you know, TCS is a very good buy because 2100 is the buyback price, and if he is not entitled to it also, because the entitlement period has already gone, so 2040 is a very good level, and even after the buyback it will continue to go up because now the result season will come in, and I think the correction of the rupee will also be benefiting this particular sector. So TCS in the larger caps is a very good buy, and in the smaller caps I think FSL, First Source Limited, which I have been recommending since 28-30 levels, and it went up to 85 levels. Now again it corrected up to 67, 68, and it is somewhere around 75. So again it is a very good level to enter into, because the best part is the PAT the company makes, and in fact the correction of the rupee will also benefit this stock. So these are the two buys which he can do, and Kelton Tech somehow I am not very confident of, you know, commenting on this stock.
All right, we'll take the next query from YouTube. Lakshmi Aditya is holding 1900 shares of Tata Global at an average price of 165. Let's take a technical view on the same. Of course, Kunal is sitting on some sizable profits. Does it look like these levels will sustain?
Yeah, you know, definitely. This stock gave a fantastic breakout on weekly chart in September 2017, and probably after that massive rally, the stock has reached the same level again. If you have an investment horizon of couple of months again, I would definitely, you know, advise you to hold the stock. Average out when the stock, you know, starts an uptick, which is around 235, and keep the target of around 285, 290 then.
All right, well, that's the view coming in on Tata Global Beverages. But moving on, we have a next query on YouTube from Anup Sahu. And, well, Anup wants a long-term view on JK Cement. Can we take a look at what JK Cement is doing at this point in time? It's currently trading at about 782, and like many stocks in the broader markets, it's come off to quite an extent. That said, Sandeep, this is a long-term view once again. So how would you help the viewer out with your view on JK Cement?
See, JK Cement is a decent buy. In fact, somehow I feel that, you know, those who are holding it, they can hold on to the stock, but for fresh entry, somehow I feel that, you know, Ultratech is a good buy on decline stock, because this is the biggest cement company, not only in India, one of the biggest in the world also. And since it is has 100+ you know, million tons of capacities, so the economies of scale, the benefits of, you know, such a large scale will certainly accrue to these kind of companies. And I feel that, you know, the competition is going to heat up. The demand and all, infra push and everything has been there, but then the demand and supply gap is now actually reducing, and now the supply glut is going to be seen, and there are lots of unlisted players also who are equally competent to these listed peers. So I think, you know, one should certainly look on to the larger caps only, something like say Ultratech or Dalmia Bharat. Those are the companies which I'm looking at this point of time in the cement sector. But again, on declines, not at these levels, because if the market corrects, these stocks will certainly correct with the markets.
All right, fresh entry not recommended. We have a live caller from Chennai. Srinivasan joins us. A very good afternoon. Srinivasan, what's your query?
Hi, good afternoon. This is Srinivasan. I have a query on industrial in bank. Long-term view, I have bought around 50 shares at 2,000 rupees. So I just want to know if I should average it at current price.
All right. Okay. Let me put this question to Sandeep, since you want a longer term view. Sandeep, what would you recommend him to do with IndusInd Bank? Do you think that the recent marginal correction is an opportunity to add more?
Somehow I really like this particular company and the management also, and the recent takeover also of Bharat Financial. So all these are positives with the company, and the company will do well also, keep on doing well. So for the longer term, certainly it's a good hold. And for a fresh buying, I think one should wait for some more correction, because see, the bond yields are going up and the banks and the NBFCs will certainly lose on this front. So one should wait for some more correction, and one can buy on declines. Rather than buying this particular sector, there are some other sectors which are actually benefited out of the currencies and the crude and all these factors. So I think one has to wait for a fresh entry, but those who are holding it certainly can hold on for a longer term.
Okay, we have another query on YouTube from Python, and the question is on actually Max Financial Services. He's bought about 3,000 shares for about 132.54. He wants a view, and he also wants to know whether or not these shares can be held or sold at this point in time. 132. This is Max Financial. Well, Kunal, I'm going to send it over to you. He's clearly sitting on a considerable profit, considering the shares are at around 465. But what would you advise him to do?
So now what we saw on Max Financial is just a day before yesterday, the stock just spiked up from around 465, 470 mark to around 520. That 520 mark is anyway turning as a resistance mark since couple of months. Since March, this stock is trying to go above 520 but not able to. I would advise that because he's sitting on considerable profit, keep a stop loss of around 420, which is significantly lower than the current market price. But once the stock goes above 520, you can start adding and you can start trading also on the same counter. Keep the target then of around 650, 660.
All right. This question that's coming up is for you, Sandeep. Girish Patil wants to know if you could suggest any sectors or, say 3 stocks which are insulated from the fluctuations that we are seeing with respect to the currency as well as crude oil. Any 3 names that you that come to the top of your mind?
See, somehow I have been recommending this since long on your channel. In fact, the IT stocks, and then the pharma stocks, and then the rural consumption stocks or the domestic consumption stocks. So they are a bit immune. But then again, I will again re-emphasize on the point that, when the market corrects, every stock will correct. But there will be the difference in the speed of correction. So I think, there are some stocks which are actually illiquid kind of stocks also, and the MNC stocks also. One stock is Monsanto. Somehow I feel that, this is a good stock. There is a big trigger also which might be coming in the stock. So Monsanto is a good stock from the chemical space. And then there is a stock called ABB, which is doing very well today also. And I feel this is also a good capital good stock, which actually has not performed the way the other stocks have. And then again, a MNC. So one can look at that company also. And the other company is Gillette. Again, it is an underperformer, but then it is a very consolidated stock, and again an FMCG and an MNC, Procter & Gamble Group company. And last but not the least, Natco Pharma, which has not done well as the other pharma companies have. The reason being, it was not underperforming also in the last 2 to 3 years when the whole pharma sector was underperforming or not performing with the markets. So Natco Pharma can be a safer bet. So all these 4-5 stocks I think he should look at. And then there is a stock called RCF, which I have couple of times recommended, and Reliance Industries also. There is a big list, in fact. And then ITC today he shouldn't buy, but then whenever it declines to say 295, 300 levels, that can be a very good opportune time to enter into ITC also. My targets for ITC is around 375 to 400 in the longer run, say of 1 to 2 years time frame.
All right, Girish, so you have stocks like Monsanto, ABB India, RCF, Gillette India and Natco Pharma, largely domestic focused companies that Sandeep recommends for you.
All right, we'll move on to the next one, and this one is on Facebook. We have Ashwin Singhvi, and he's bought 1,000 shares of Sanghi Industries at 140, and his question is, should he hold or exit? Can we take a look at Sanghi Industries? It's currently, well, okay, so it's clearly under pressure and doesn't look like a very volatile or rather a very liquid stock too. It has come off quite substantially. It's around 78 odd levels. As I suggested, volumes are relatively low. Kunal, what would you recommend him to do? Should he book losses and exit, or do you think there's a possibility he could exit at higher levels?
So no, this stock actually came into downtrend since January itself, and since then the stock has never made higher top, higher bottom even on daily chart. This stock somehow could have sustained the 76 mark, this current market price being 78. I would, advise you to stay hold on this counter for 2 more rupees. If the stock gives a closing below 76, definitely exit, because there can be more pain left for the stock. Any spike above 90, by with the grace of God, if the stock goes above 90, you can expect the turnaround to happen then.
Okay. Rangarajan Balakrishnan, that's a Facebook viewer, wants a view on Bandhan Bank, and Kunal, this is coming your way. His average buying price is 650, and of course the stock has fallen closer to those 600 levels. What should he do? Hold, average or exit?
So Bank Nifty itself is bleeding right now, and every indices are facing some kind of problem. So this stock may continue to downfall for couple of more tens. So I would expect the stock to make bottom somewhere near to 585 to 580 kind of levels. But as of now, definitely it's a clear fall. So don't try to catch the falling knife. Advisable to average out somewhere near to 580 if at all it comes to.
All right, we have a question from Vivek Kanodia on YouTube. He has 3 stocks in mind, but the first one is from the banking space. His question is on, comparing RBL with Kotak Mahindra Bank, which is looking better from a 10 to 15 year, SIP investment. And he also holds Ashok Leyland. Vivek, Sandeep has already spoken about Ashok Leyland, and he looks at Ashok Leyland very favorably. And from a long-term point of view, that is 10 to 15 years, he certainly would suggest that you go ahead and either hold your position or buy. But Sandeep, I'm going to come back to you on the comparison between RBL and Kotak Mahindra Bank from a 10 to 15 year view. What would you choose between the two?
Very tough question. In fact, the question is actually put in a very smarter way, in fact, and I must appreciate the choice of at least the 2 choices. Both the banks are doing very well, and both the banks somehow I really like them. And in fact, 10 to 15 years time frame is a very good time frame, and it's a no-brainer. I think he should put 50-50 in both of the banks. Kotak Mahindra somehow can be bought on some correction, and even RBL for that matter, because see, banking sector might correct, because as I have told that bond yields will have an impact on this. So he could wait for some time, and then there will be good opportune time to enter into both the stocks. Somehow valuations wise, RBL is cheaper for obvious reasons, because Kotak Mahindra Bank's management and the pedigree and all are actually valued and given a premium by the market. So I think Kotak Mahindra Bank, those who are holding, they can certainly hold on to the stock. For fresh entry, I think there can be some, he can wait for some time. And for RBL Bank also, looking at the valuation, somehow it is a good time to buy on some declines of say around 5 to 7%.
All right, the next question also is specifically for you, Sandeep. Om Prakash Singh, a Facebook viewer, has 75 shares of Britannia, which he's bought at 6810. So clearly he's bought it at close to the all-time high levels, and the recent correction seems to have sort of spooked him out. For a 5-year view, he wants to know what to do. Your views on Britannia, Sandeep?
See, Britannia is certainly a no-brainer kind of stock. One can hold on to the stock, but then when it comes to FMCG space, somehow I have been very bullish on ITC. I feel that the stock which is running at say 30 P multiples, 30-31, and Britannia is I think 70 plus. I don't remember the P multiples, but then it looks very expensive to me, and and it actually has given multi-bagger returns also in the last 1 year. So why not we should go for a company which has not actually performed with the sector. All the rest has actually performed, and this is the biggest FMCG company as on date in India, and due to its diversification and other businesses like hotels, papers, agribusiness, somehow it is not given the same kind of premium as the other FMCG players are. But then the company is also entering into the dairy space also, where it will give direct competition to say Amul, Britannia and all these companies, and the non-cigarette segment revenues have actually started showing some results. So I feel one should certainly look at ITC for a fresh entry, and it will certainly is a better risk reward, better safer bet than the other FMCG plays. So 270, 280 is a very good level where it will take a very strong support. So the risk reward ratio is more than, I think, 1:4 or 1:5. So to lose you have 20-30 rupees, and to make you have around 100 rupees. So it's a kind of a logical and a wiser decision to get into ITC.
All right, guys, we're going to start with a rapid fire round, and to both our guests, Sandeep and Kunal, request you to keep your answers short so that we can accommodate the maximum number of queries. Saurav Kumar is asking about HDFC Life. Kunal's question is for you: good time to average or a little more downside possible?
No, more downside is definitely possible because the stock has breached the 200 days moving average, and so definitely it would be like catching the falling knife right now. 420 would seems the best level to enter.
Okay, Kunal, I'm going to ask the next one to you. It's on Reliance Industries as well, where one of the viewers is, his entry point is 1112. What would you do?
This stock again today made a low which is near to the demand zone itself. The best support for the stock is around 1220 to 25. Any closing below 1220, I would expect the stock to reach around 1150. So keeping that as a stop loss, one can hold the position.
Sandeep, what should one do with Indigo if you have a longer-term view, Interglobe Aviation?
So, see, it's a clear-cut exit on bounce, and certainly it has corrected a lot. So at this time, I think one cannot book losses. So it might give some bounce with the fall in crude oil, which is at a very hot level. So I think exit on bounce will be a good strategy, and for longer term, I don't think one should invest in aviation sector. Sorry for giving a longer answer.
Okay, the next one is from Anoop. His question is it a right time to enter Voltas with a short-term view? Kunal, this one's for you.
So short-term, definitely yes. The stock has made the bottom, which is near to 200 days moving average, which is 570, keeping the today's low as a stop loss. One can definitely go long and expect that stock to reach around 595.
All right, Kunal, the next question is once again for you, and this is Unichem Labs. If you can pull that stock up, buying price is 340, is currently trading closer to 220. Exit or hold?
So Friday closing comes near to the present level itself. Definitely, it's an exit for this level, the stock.
All right, Sandeep, the next one is for a long-term horizon from Vimal Kumar. His question is on Manappuram Finance. What is your long-term view on Manappuram Finance?
It's a buy. In fact, it's a buy on declines. It has corrected, and the company is growing at more than 100% per annum. So, and the company is a fantastic franchise. So one should certainly buy on declines, and one can start also buying in a staggered manner at these levels.
All right, this is the last query that I'm going to try to fit in. Your view, Kunal, on NoSil. How is it looking on the chart?
So NoSil was in consolidation since entire month. The stock, can be bought near to 160, keeping the stop loss of 155, and expect the spike till around 175.
All right, guys, those are all the queries that we could actually accommodate today. And on that note, we would also like to thank our guests. Thank you very much, Kunal and Sandeep, for helping our viewers with all their queries. That's all that we have on this edition of Ask BQ.
But remember, we are just a tweet, post or a call away, so keep your queries coming, and we promise to address all of them through our shows. You can also log on to bloombergqueen.com, search for the Ask BQ hashtag, and get the answers to all the queries that we discussed on the show today. Up next is Power Lunch. Stay tuned to Bloomberg Queen.